Hi, Adam Hindmarch from Prospa Property Advisory. Just wanted to put a quick video out, just following the Royal Commission, the Banking Royal Commission findings being released yesterday. I'm going to keep this video brief. There's an hour and a half of things I could talk about relating to that, but just wanted to point out one of the things where I see a clear winner in this and some clear losers. So certainly one thing I do see is the banks have come out as winners in this whole thing. So why would you say they're winners? Really, they have come away pretty well unscathed, and in the next 18 months to 3 years, they're going to have a significant windfall of income. Why are they going to have that windfall of income? That's from the losers, who are the mortgage brokers. So mortgage brokers, there's about 16,000 mortgage brokers in Australia. A lot of them small business owners who contribute to the economy, and how they get paid is by introducing you as a client to a bank and facilitating the loan. So that means seeing the loan right from the application stage, working out who the best lender is, getting that right through to the stage where that loan settles. Now they get paid an upfront commission for that based on the size generally of the loan that you take out, and they also get paid a trailing commission. So each month they'll get paid a small amount of money based on servicing you and continuing to service you as a client. Now, the trailing commission is one that has been touted for a while as maybe being looked at being removed, which to an extent can be understandable. What it does do though is it stops the banks really from having to deal with you as a customer. So banks, rather than you as a customer going back to your bank asking for advice on your loan, you'll go back to your broker and they'll manage everything for you. In terms of what the Royal Commission is saying, they're looking at removing that trailing commission, potentially within the first 18 months. So that'll be an adjustment to a mortgage broker's business. The biggest part where mortgage brokers will be losers is within 18 months after that. So in the next 3 years, the banks will be looking to cut commissions out completely for mortgage brokers. What they'll be looking to do is to transition to what the financial planning industry uses, which is more of a fee for service. So you'll be paying your mortgage broker for advice on which bank to go to. The mortgage broker doesn't get any kind of payment from the bank. So one thing where I see the banks are the winners in this whole scenario is that at the moment, at least 50%, if not more, of all loans that are originated in Australia are written and originated by a mortgage broker. So banks for years have been using the mortgage broking network to build their own business, and I think in the last couple of years certainly they've been looking for ways, some of the big lenders I suspect have been looking at the ways where they can undercut the mortgage broker now that they've got this large book of customers. So, and I will put it out there, I am a former mortgage broker, so I understand how it works. What that's going to mean realistically is, are people, customers looking to get a loan, going to pay a mortgage broker for their service? So a couple of things I'll focus on. First of all, from the mortgage broker's perspective, and firstly the customer perspective, then the mortgage broker. So my advice to a customer is speak to a mortgage broker. Quite often they will get you a better deal, and it might not be a cheaper interest rate, because let's face it, anyone can put out a cheap interest rate. It's the structure, the bits and pieces behind the loan that can quite often make up the difference. So it might have an offset account, there might just be better terms and conditions in general, which are more advantageous to you as a customer. Secondly, it's structuring the loans, particularly in the investment space where I work in investment property. What I see with banks is they don't set up the loans favourably for customers, and that's in a lot of occasions. Not always. Banks will tend to cross-securitise loans, which means they take a better grip on the customer, and sometimes it's harder for a customer to get out of that loan, sell a property and be more fluid and flexible with their portfolio. A good broker, and not all brokers are good, but a good broker will understand how to legally protect you and maximise your portfolio and what you can do with it. In terms of brokers, what I'd be saying to you now is, who are your best customers? Identify who they are and start working with those customers, as I'd expect you already are. So your better customers will be the ones who will understand the benefit of paying somebody for a service and getting the results from that. That's something that I think is very important. The other part for a mortgage broker is to consider diversifying your business so you bring additional income streams into the business. So you're not just going to be reliant on an upfront fee. in 3 years' time when the rug gets pulled out from underneath you. So look at your insurances, property, whatever other avenues you can add into your business that will help you to generate an income stream. So thanks very much for your time, and all the best.